You're on.
The Fed just pivoted. Welcome back to the Russel Journal. My name is Russell, and this is my journal entry for Wednesday, November 30th, 2022. Very interesting thing happened today. The Fed pretty much just pivoted. You can see, let's start from the chart behind me. This is a chart of SPY. Came from the lows of 394, closing all the way up over 407 today. And the reason this happened is because the Fed has pivoted. Okay. Uh, Now, most people won't consider this. Most of the bears out there will not consider this a pivot. You still have interest rate hike coming at probably 50 basis points. You still have interest rates are literally like 1,600 times higher than they were a year ago at this point, and they still are going to continue to go up. So, how exactly is this the pivot? And the answer is that the Fed is softening its speech, and it's softening its speech in relevance to, into a market that has softened ahead of it. Okay. You look at something like the mortgage rates, which went from 7% to 6.6% in November. Okay. This is a huge drop. It's almost a 0.5% drop in interest or mortgage rates. Okay. So what this represents is the market really trying to soften ahead of the Fed, and the Fed being okay with this. Okay. And that's what they've basically said when Powell made that statement, right? It's not that like they weren't going to do it, but we're still 2 weeks away from FOMC. You still don't have two back-to-back CPI readings of lower interest rate or lower inflation, right? You still don't have a lot of things that are flagging that inflation is coming down. And the Fed does have the license to continue to raise at a 75 basis point rate hike, right? But what the Fed is seeing is that they are looking towards, and we all know that the Fed is looking towards reaching a neutral point, okay? And forgive me, I need to drink a little. I have got this cold. It is nasty. I've got to keep things going here. All right. So the thing is we all know that the Fed is reaching sort of their zenith as the highest point of interest rates, right? Interest rate hikes. And we know they're going to want to slow the pace of those hikes. You're reaching the top. You're closer to the end of the tightening cycle than you really were the beginning of it, right? Now it's sort of stupid because it's a year later from when the tightening cycle began. You have to be closer. It's it, right? You have to be closer. So how much closer? How long do interest rates have to stay elevated? What damage will that do to the economy? All of this stuff is left sort of unknown. However, the signs that you're getting near the end are there. The Fed is finally starting to pull back on how quickly they're raising interest rates. They're still going to do probably 50 basis points. There's a pretty safe bet as far as that goes. But so this is really giving the bulls all they need to believe that they're getting their money to work near the end of the tightening cycle, or a lot more near the end of the tightening cycle than the beginning. Okay. But the thing that is really, really crazy about it, and again, this is what is really nuts about the whole thing that makes this thing go up the way it did. The Fed is not going to try and fight this bit of softening. We can go look at the bond market and see the rally it's had. We can go look inside of the mortgage rates and see the pullback they've had. And here, what you're seeing is that the Fed is simply kind of saying it's okay. They're not going to say something or do something to put that back down. They're okay with this. Now, how or why this makes sense, it doesn't. And here's the real problem, okay? With something like rent inflation, right? Rent never goes down. It never tries to go down, okay? It never does, right? Where it sits is that rent typically just stops going up for some short period of time. It never you never actually get a correction in rent prices other than they flatten out for a couple of years and then they start before they start going up again. Rents are not flattening out. They're continuing to rise. And with the Fed doing this, that rent inflation is going to continue to rise. It is going to make inflation very, very sticky. And so this sets the stage for some really nasty things to happen in the coming year. Now, assuming the trajectory was fine, let's say rents were falling. Let's say we were seeing that and the Fed came out and did this. That would be fine. But rents aren't falling. Things like rent isn't coming down. Sure, mortgages are coming down. Housing prices have corrected a bit to the downside. But the cost of rent is not getting cheaper. I'm a person who rents, I know, right? So this whole thing really puts in motion the stagflation scenario. Now, typically what I think most people see as stagflation is stagflation is high inflation based on high labor. This creates stagflation. Okay. What happens with this is cost of living goes up. People want higher wages, so they get higher wages. That makes the cost of living go up. People want higher wages to match the cost of living, so they get higher wages. That makes the cost of living go up, right? And it just keeps going up and up and up from there. Okay. So this creates that is stagflation. Okay. You're going to have this, I think, but you're going to have it with housing because America is in a housing crisis. We have not enough houses and too many people. Okay. So what's going to happen is the cost of housing will go up. People will need to make more money to match the cost of housing. That will go up. And so you will wind up in a stagflation type environment here. It is going to be very nasty for probably the next couple years, if not the next decade at this point. And if anybody ever says why that happened, it will be today. It'll be literally November 30th will be the day that it all shit the bed. Not joking. That is seriously, that's it. I don't agree with what Powell said today. I think that he should have, even if he was gonna do a 50 basis point hike, he should have laid the hammer down. He should have been just as nasty as he was in Jackson Hole. He should have been worse. He should have been ruthless. He should have made them think that he was going to do 100 basis point hike in December. Right? Now, for 2 freaking weeks, things would pull back. Things would continue to cool down. Now, probably for the next 2 weeks, you're going to get the run up. So let's go ahead and let's go through the chart and take a look at here all of the things. Obviously, you can see from the chart behind me, crazy run up today. Boom. That's most of today's price action. Over here is ahead of Powell speaking. This is where he said what he said, and that's really when the thing went absolutely ballistic. Let's go into the daily, though. All right. So our trend, uptrend, higher highs, higher lows at this point. You got yourself an outside day up and one hell of a one. Do not be surprised to see this pull back a little tomorrow and test. It's kind of equivalent to this thing that happened down here. So don't be surprised to see some selling into tomorrow and stuff, but also expect to see it make a higher high, and I'll show you why here now. Okay. Okay, so your trend is up. You have a bull trend. Higher highs, higher lows. Higher high, it's higher than that high. Higher low, higher than that low. Okay, your bias, long bias. You are at the 18-day moving average. You're above it. Your bias, you're looking to buy calls. You're not looking to buy puts. Even though the economic environment's crazy, calls it is. Momentum. Okay, here it is. With your momentum, you can look. You can see you lost your bullish embedded reading. You came back, tagged that 18-day moving average. Now, what did I say I said in Sunday's video? I said, look to see this ahead of some of these reports and stuff, pull back to this 18-day moving average. Now, I'm not a genius. I didn't figure that out. This guy, Ira Epstein, I follow, actually the guy who taught me that. And that's basically what happened. Came back to the 18, and now the challenge of an 18-day usually met with a bounce. Okay, so getting a bounce here, not really that big of a deal. Getting this bounce here, though, is a huge deal on that speech from the Fed. Okay, we will see if the Fed backpedals some of that going forward. Now, where has the resistance been? Resistance has been this bad baby right here, the 200-day moving average. You can see we were coming up against it. See, we were flying in breakout formation, riding this today with that speech from Powell. It gave them all they needed to break above it. What's the price target? Where are we headed? Turning on the Bollinger Bands. Now, turning on the Bollinger Bands, your next price target will be this upper band at 412. Again, don't be surprised to see this pull back a little bit tomorrow. That was one hell of a move. You can go back over here and see we got a similar candle, even though it was all the way down here. The next day did give you a pullback. So don't be surprised to see this pullback tomorrow. Use it. Look for some long entries. If this slow stochastic. Now, I don't know whether he'll think this has re-embedded or not. I'm going to treat it like it re-embedded and look for long entries. But I'm definitely hoping for a good pullback tomorrow, not to short, but to get long. I don't want to scalp here. Again, I think this is really good. The other thing that's really nice about it is a good pullback. If I can get a middle way through this candle, like pull back, test this 200-day moving average and go long off of that, you're really only risking down here. It's like a $6 move. So it's not even that big of a risk to the downside. So that's kind of where I'm thinking is what I want. Again, this is really all that sort of matters. You do have non-farm payrolls, but basically Powell just sort of tipped his hand. I'm assuming he did it on purpose. I'm assuming he knows what he's doing. He is trying for the soft landing. So we'll see the push-pull. Again, I still have my bear thesis that they're going to, you will get the deflationary recession, and it's probably going to start in January. But we don't know. This, in all honesty, if I'm thinking that, Powell's probably already thought about that. And this might be part of his ability or willingness to try and step ahead of a deflationary recession. So that could be it. Anyway, that is all I have for today. Thanks for checking out the show. Appreciate you guys for watching. Thank you, Mom, for supporting my channel. I want to give a shout out to her. She's always here. She always likes. She always comments. She does everything she can to help me with the YouTube algorithm. So thank you, Mom. Means a lot. Even though sometimes you're my only, pretty much all the time, you're my only fan. But that being said, the Russel Journal is written, edited, hosted by me, Russell List. We are produced by Social Media Shows. Our executive producer is Maria Pereza. If you want to have a show like this, somebody can help you out with the algorithm and all of the things that will hopefully get you more than just your mom as a fan. No offense, Mom. You should check out Social Media Shows. They can help you with this a lot. So in the meantime, until tomorrow, let's just pretend I said some sort of catchphrase.